with Chile, as some of you might know also, right, Chile is very outward looking, right? Chile has also been implementing significant reforms. Well, something interesting about Chile that applies to the current crisis is that Chile has done an excellent job in macro management. And this is because what Chile is doing is that it has been able to create some stabilization funds. So here, pretty much, we say that they have created these stabilization funds because during the 2000s, we have seen a significant increase on the price of copper. So they have this huge windfall. And instead of going and wasting it away, what they did, they put it back and save it. So therefore, now that they need to implement this fiscal stimulus to deal with the financial crisis, they have these stabilization funds to draw from, right? So therefore, by doing this, we say that Chile has been able to avoid the procyclical bias of fiscal policy. So what we see is that usually what they do, they put away, they estimate how much they are expecting to get on the windfall profit from the state-owned copper company, Codelco. And then they also estimate how much they're going to get on tax revenues from the private companies in the industry. And then they will put that money away and save it abroad in bonds. And they are now considering to buy foreign stock funds. So therefore, it's very interesting. I like it how I found in an article that the Chile's finance minister say, well, the way that we deal with our finances is the following. Chile will spend what is permanent and will save what is transitory, right? So here, spend what you need to spend, and whatever you get extra, save it, because you are going to need it later. And that's what we see today, right? So they have these funds, the rainy day funds, and they seem to be doing very well. Well, a commonality of these countries, and in general in Latin America, is that they have been able to implement effective policies in a timely manner, right? So which is a plus here when we're looking at the financial crisis. Well, the lessons. I think this is the most important part of the lecture, right? I think because we want to learn what things have gone right so that we can continue doing that, right? And the first one is that I think Latin American countries have realized that it pays off to be fiscally cautious. So Latin American countries have gone through these significant reforms in the 1990s that allowed them to decrease government spending, right, and spend money more wisely. And you will look at the region as in general, right? There might be some outliers, like the case of Venezuela. But if we look at the region in general, we're going to see that the government debt as a percentage of GDP has diminished significantly. So therefore, they are in a better position today, right? Because now that they need to increase government spending, then they can start borrowing, right? And they have some room to go through, right? Because they have been fiscally responsible in previous years. Then another important fact for Latin American countries is that central banks and improvements on the financial institutions have played a key role, allowing them to be resilient to the financial crisis. And when we look at the central bank performance, in general, Latin American countries have also done a good job, because we can see that in many of these countries, they have moved from having inflation rates on the triple digits to 1 digit, which is wonderful, right? So therefore, that gives them also more room to work with monetary policy, right? Because then they can use an expansionary monetary policy without causing significant inflationary pressures. Then also, the improvement on the financial institutions has been important, right? We have seen a significant increase on credit and a significant increase on financial regulation and supervision, and that has allowed the financial systems to keep relatively healthy during the financial crisis. Well, the next lesson is very important. I think that Latin American countries, after the reforms of the 1990s, have been able to build up credibility on their institutions, and that really helped out so that countries do not panic with the financial crisis. So what we see is that Latin American countries have more credibility, right? So even if things are going bad, you see employment going down, but then you know that there is some stable policy in place that will get you out of it. So that is very important, right? Because you don't wanna create an environment where you see that the position of the government is unsustainable, right? So, or that you don't want to create an environment where you don't trust the central bank being able to monitor inflation carefully. Then I will say that the last lesson that I think is also important is that countries should not be afraid to ask for international help. Well, during the financial crisis, we saw a lot of Latin American central banks working with the Fed to ensure that there were going to be enough supply of foreign currency. So cooperation is very important. Then also we see some cooperation related to facilities for trade finance. And then an interesting case here is the case of the IMF. Well, Latin American countries have been very resilient to get help from the IMF because during the 1980s and 1990s, the IMF used to give them loans with conditions. So now the IMF has changed the approach. The IMF now has created a flexible credit line, so created in the midst of the financial crisis. And with this flexible credit line, there is no stigma attached and there is no conditions attached. So therefore, countries, right, can tap into these. And we have seen the case of Mexico. Mexico took advantage of this credit line in May of 2009, and it has definitely helped Mexico to keep a more stable economy. So therefore, more Latin American countries should evaluate, right, if they need to tap into these, right. Then we also have the World Bank and the Inter-American Development Bank increasing the funds available to deal with the financial crisis. Okay, finally, the challenges that I want to talk about today is that, well, the first challenge for policymakers in the region and for Latin American countries is that Latin America's fate depends on the recovery of developed countries. Because Latin American countries depend significantly on their export sector, and specifically the exports of commodities, right? They can use fiscal stimulus, and that can help them. But the fiscal stimulus can go only so far, right? The global demand needs to pick up, right? So that also commodity prices pick up, right? And that they do better on their external sector.